Yep, we have it now. We have the cash rate being unchanged, 4.35%. No surprise there. Looking into what the monetary policy statement is and what it does include, they at the moment are suggesting that a strong recovery in labour productivity is taking place at the moment as well, and the board is resolute in its determination to return CPI to their target here as well, and expectations remain consistent within reaching that as well. They have also cut their December 2024 CPI forecast to 3.2%. It was 3.5% before, and seeing at the moment that unemployment will peak at 4.4% in mid-2025 and hold there, and that CPI should further, of course, be eased through the fourth quarter, but would remain too high. But overall, financial conditions, they say, appear to be restrictive. The labour market's still tight, and we've got an Aussie dollar which is remaining consistent with the key drivers. So there we go. Further increases in interest rates. Further increases in interest rates. This is key here at the moment. Cannot be ruled out. That is just crossing the Bloomberg terminal at the moment, saying that the path of interest rates that will best ensure that inflation returns to target in a reasonable time frame will depend upon the data and, of course, the evolving assessment of risks, and a further increase in interest rates cannot be ruled out. Jacinda.
That's right. Let's put all of that into perspective. Micaela Fuchila is the head of Australia and New Zealand economics at Bank of America. She joins us from Sydney. Micaela, what's your take on it? I mean, it's saying that further rate increases cannot be ruled out. Is that a surprise?
Not really. We thought they were going to try to reinforce their hawkish stance to make sure that financial conditions don't ease too quickly. And the housing sector, for instance, continues to see price rises. So this is in line with our expectations, with a focus on just gaining more confidence that inflation's coming back to the target, potentially at a faster pace than they had expected, considering the changes in the forecast. But overall, it's pretty much in line with expectations and not really major changes to the guidance. There are some changes in the structure of the statement on the back of, the changes to the RBA as an organization, with new board members, a press conference that's going to follow through at 3:30 today, and the statement on monetary policy being released at the same time. So it's a lot of information to digest.
A lot to digest. From what you're hearing right now, when do you expect that rate cut to come?
I think I still have more confidence that 2025 in February is where we're going to see easing coming through. In saying that, if we see inflation falling faster into the target, the risk is for an earlier move. But as you said, the labour market remains in good shape. Growth is soft, but it's not really collapsing. So there's not a strong case just yet to see easing anytime soon.
Micaela, are you still of the volition that we could see the base rate cut actually in next year? I think you've alluded to some of this here as well. Why do you think that in a bit more detail, please?
So I think there's a strong case. So the RBA needs to wait and see how the data turns after having delivered that many rate hikes in a very short amount of time. So inflation's still high and sticky, particularly for the domestic side of things. We did see a downside surprise last quarter, but that was basically driven by tradables and goods. We haven't seen the services side coming back down as quickly. I think the RBA will want to be confident that inflation is moving in the right direction before starting to think of an easing cycle. The second thing is we think 2024 is the year for fiscal policy to take the front stage. We had an announcement of tax cuts trying to support consumers there. There's more coming potentially ahead of the budget in May. So they will want to be careful to boost the economy too fast, considering how long it has taken to get inflation under control. I guess the devil's advocate to that is the consumer sector. Consumers have been quite constrained, and we are seeing weaknesses across the spending categories, mostly reflecting that consumers are spending just to get by. And it's been the case over the second half of last year, and we expect this year to be one of the key uncertainties going ahead. That could be something that the RBA will keep in mind if they keep interest rates high for longer. But we do see the government stepping up and taking that responsibility before the RBA announces any sort of easing.
Micaela, so, I mean, it does seem that fiscal policy on the face of it is not really complementing monetary policy, but then you factor in what they're saying about inflation really at the moment taking its toll on real wages, and I suppose that's perhaps muddies the waters a little bit.
Yeah, so the RBA's bulletin last month was actually interesting. They included a lot of information about household incomes and how they've been constrained by this environment where high inflation and high interest rates and higher rents as well, which are a really big part of consumer spending. They have been seeing constraints from every single angle. From that point, though, what we have seen is that they've been quite resilient. They continue to pay their mortgages. They continue to continue to afford their commitments and getting by. So I think what the RBA is trying to see is more evidence that demand is slowing significantly to support, to create the need for further support. I don't think the federal government is doing a lot to say the contradicting policy stance. I think the government is trying to address the cost of living, which eventually feeds into lower inflation. And that's as they did, for instance, with electricity rebates and rent relief. These sort of measures actually flow into inflation and they lower the headline inflation level. So they continue to support consumers while trying to address the inflation problem. So it's a really difficult balance, but I think they're doing a good job at it.